Good morning and welcome back. We were in a conundrum as to whether we should come back yesterday, seeing as how U.S. markets don't observe Easter Monday, but then we decided to put one down in the name of spirit rather than the essence. So here we are. Index futures in the U.S. were down this morning despite a nice pull as markets closed yesterday, up 1 to 1.5%. The dollar is in a very slight upward inclination after market delivered slight improvements in March's service and composite PMIs. ISM's numbers coming in a tad better. Factory orders in February, however, contracted by just under 1% this afternoon. Jobs will publish its jobs openings measures, and the IMF and World Bank convene for their annual board meeting. U.S. Treasurer Janet Yellen says she's hoping to work towards a minimum global corporate tax. But corporate America is on a bipartisan front this morning as Republican kingpin Mitch McDonald warns company CEOs to stay out of Georgia politics. You'll remember that last week Delta and Coke finally dared criticize their state's new voting laws in Georgia aimed at restricting minorities and the poor from voting. The Mitch warned of dire consequences. In other corporate news, James Packer is reportedly considering a $6 billion proposal from Blackstone for his Crown Resorts casino operation. Now that they've scaled back media as well, that should leave the legendary tycoon's grandson with not much to do. Tesla closed up 8% as the company reported record deliveries in Q1. And the honeymoon between Google and Oracle is over. The search giant has decided to shift its cloud environment towards the German SAP company. This is Oracle's second strike after Amazon decided to develop its own proprietary software also. The move comes after the U.S. Supreme Court overturned a 2018 decision and ruled in favor of Google on its use of Oracle's JavaScript. European equities entered the holiday season in the green on Friday. Today they await opening bell with futures still up. Coming out of the long Easter weekend, Italy joined Spain today with February unemployment figures in an hour and a half. The Centix Investor Confidence Index comes in a half hour before the EU's unemployment rate at 9 GMT. As markets ready to open, the FTSE continues to struggle with that 68.10 resistance level. We can see quite regular pullbacks from attempts to break out of the Bollinger Bands. Still, with the RSI and moving average upward bound, the setup seems to be optimistic for today's open. Asia this morning came back online, mixed down in China and Japan, up in Hong Kong and Australia. Yesterday saw a rising service PMI in Japan, but a disappointing contraction overnight in household spending. China delivered a 2-point increase in its services and composite PMIs, and China's Foreign Minister Wang Li warned his Japanese counterpart Toshimitsu Motegi against joining growing Xinjiang sanctions during a 90-minute meeting yesterday. Finally, Australia early this morning decided to hold its current interest rate at 0.1%, citing the global relaxation in bond yields and a local surge in house prices. Gold is also on the up thanks to a recently weakening dollar and a movement away from last week's 14-month peak in treasury bills. And oil is back in on the bull thanks to the same weak greenback. At the moment, technicals don't look good. Where between supports 1 and 2, the MA and RSI is still bearish, and OPEC Plus has upped its production quotas. Unless the API comes up with some really surprising data at 8:30 tonight GMT, we could easily drop towards that 57.40 low again, but remember, we have gone much lower. And so, on that bright note, we leave you to enjoy the rest of this shortened trading week. From me and the staff at The Breakdown, have a great time.